Folks, Dan Frio here, the opening bell with Dan Frio, and today is March 8th, 2021. Got a lot of good news coming out today. The stimulus package did go out. I had somebody, thank you, send me a copy of it. It's 567 pages, so I'll try my best to get through that. I just want to highlight the stuff. Here's why I don't post prematurely on this stuff, because I want you guys to feel that the content that I'm posting has been validated. It's not skewed, meaning it's not skewed to the right or the left. I'm just telling you as it is. When I get frustrated with some of these things, it's basically I'm speaking as an average American, saying, the government and so many things get kicked down, the can gets kicked down the road, and these do affect us in the long run, and that's what I'm trying to educate people on. You get a $1,000 check today, but if everything that you do in life, gas, interest rates, all this other stuff goes up in prices, that $1,000 is going to go away like that, and you're going to pay excessive on all these other things over the long term. So we're going to dig into that next, so don't go away. Okay, so we have some analysts coming out and starting to ease the markets a little bit. I think the Fed is also going to work on the back end with things. They're going to start twisting, and I'll explain that tomorrow or Wednesday. I'll explain to what the Fed twists mean. They're buying long end or longer term, we call it the back end bonds, to kind of appease or control rates a little bit. But let's go on to what's happening in the markets today and kind of give an analysis of what my thoughts are right now and what I think the week's going to transpire into. So let's get to it. We are off to a good start for the week. Let's go through the indexes. S&P 500 is up 33 points. The Dow up 492. NASDAQ it just went down into the negatives. We were in the green there up until basically right now. And the Russell 2000 is up 33. Everything good right now, short-term good is good. Okay, so let me explain that. The vaccines are coming out, and people in by the millions and millions are getting vaccinated, and now the CDC says if you've been vaccinated, you can gather without a mask. Okay, how do you know that people that don't have a mask has been vaccinated? Don't know, but let's go with it. Stocks rise, Treasury yields advance amid stimulus optimism. Guys, they're talking about possibly a stimulus, 500 coming up. We don't need it. I'm going to leave it at that. I won't rant and rave. Fed extends small business liquidity facilities for 3 months. That is great news because corporate bonds have been kind of hurting as of late. So the Fed's going to step in and help there. Despite rising rates, it's still really a great time to buy a house. That's from United Wholesale Mortgage. Their COO, he's a really nice guy, and he knows his stuff. But again, guys, on our side of the fence, we're mortgage people. Like stock people, they push and pump up stock values. We try to give you the most optimistic views on housing and rates. I try to give you my true unbiased opinion on that. What I talk about is, and guys, I'm a mortgage guy. I'm not a financial planner or wealth advisor. I do this stock morning update for you guys for educational and entertainment purposes only. Basically, what I do is I'm a mortgage guy. I'm a mortgage lender. I've been doing it for 33 years. I would love to help you if you're in need of a mortgage, if you're looking to build, buy, refinance, anything. Just what we ask you is just call us, and we'll go through all the options with you. Especially if you're in forbearance, we're going to put together an exit strategy for you. That exit strategy might just be keep the loan you got. Throw the payments at the end of the loan and move on. Or we can say, okay, if you refinance, here's what could happen and would happen. So those are what we do. So let's get back on to all of this. Rates are still historically, crazy low. You might say, 3 is high. Well, in history, the average rate's around 8 to 9% in history. Hasn't been there in a long time, but that historically, that's where we're at. COVID release bill. This is some good news for stocks. COVID relief bill unleashes households on stock market. What's going to happen is when people got their stimulus checks last time, and a study showed this, over 50% of that COVID relief to families went into savings. That's counterproductive of what they were trying to do. The government's throwing a ton of money out to households basically to help them stimulate the economy. How? By buying stuff. We are a service-based economy. We are not savers in the U.S., so it is imperative that people go out and spend. Okay, so here's the backdrop of all this stuff. Everybody and their mother's coming out with vaccines, which is great news for the virus and the pandemic. That's going to start easing, and there's a lot of news that just came out saying hospitals are way down. So that's great news for that. The employment numbers, I don't think they're going to be fantastic. Why? And I'm just giving you the truth. If you go out there and say, you know what, if you're not working, we'll pay unemployment until September. Guys, with the excess in the stimulus, you're going to get $600 plus your state unemployment per week. You could get $1,000 a week in net money by staying home. Probably not going to force a lot of people back into the job force, okay? Here's another turn on what's going on with rates. You keep seeing a lot of this information saying, bond yields are up and bond yields are up. Well, another component of that is a lot of people, when they get fearful of the stocks and everything, you normally had stocks and bonds to invest in. Let me move my screen a little bit so you can get my hands. Now you have stocks, bonds, and cryptocurrencies. So when people are fearful of stocks and they want to flee to safety, I'm not saying this is the safest bet, but there's billions and billions and billions of dollars going into cryptocurrency that would have otherwise went into bonds. That's another take on this, and I'm gonna dive in on that this week, a little more detail to bring information to you guys. Let's see what else is going on there. That is Yahoo Finance. Let's see if CNBC has any difference. Dow jumps 450 points as Senate passes the stimulus. Beats up tech stocks. What's happening right now is because of all this stimulus and everything, people are saying, we're going to get out of tech stocks. Why? Because a lot of people went into tech stocks and high flyers like that because they had great yields. And for example, everybody was staying at home, working from home. So companies like Zoom, they did fantastic. You weren't shopping. So Amazon, fantastic. You have a lot of plays like the cable business. Netflix, fantastic. Why? Nobody's leaving their homes. So now what are you going to have? You're going to have a move into cyclicals or growths, such as, just now, Saudi Arabia just got bombed by a drone from somewhere, and that's going to put a bigger damper on oil supply. So now as the economies, China, us, everywhere around the world starts to recover from the pandemic, you're going to have more and more energy needed, and you're going to need more and more oil. Well, oil supplies are going to go down because we put back a lot of regulations in the U.S., and now we're dependent again on the Middle East, and now you have tensions in the Middle East, so that's going to even emphasize this. And I was on my way to work today, and gas about a couple weeks ago was in the low 2s, and now we hit 3. And that happened pretty quick. The good news is here, Dave Tapper, he's a huge financial analyst. He just came out and he is bullish on stocks. This is going to be the one trigger today and what happens with stocks. He's saying rates are going to stabilize, which I think they're going to as well. There's a lot of overreaction all the time whenever you do, a lot of movements, you always overcorrect somehow, some way. All right, cryptocurrencies. What are they doing for today? Well, we got Bitcoin up 0.39, up 5% for the week. Ethereum had some great news today. If you watch Ben Shapiro or some other places, they're saying the financial sector is going to move into eventually the Ethereum platform. This is actually the platform that cryptocurrencies trade on. So dig into what that is. But it's up 5% today, 12% for the week. There's others through here, other positions that I hold big positions, not big, but I hold positions in Bitcoin and Ethereum. Then I also own positions in Litecoin, which is right here. It's up 6% for the week. It's down basically 0 for today. And positions in Bitcoin Cash. This sphere here of cryptocurrencies, you got to really dig into it. Because there's a ton of them right now, but I focus on best of breed, and that is Bitcoin. It's been around the longest. It's taken the most the stance by governments and big corporations that they're investing in this. The Ethereum platform is what it trades off of. So I use this as basically a one bet on cryptocurrencies, and it's panned out very, very well. I have videos posting later this week in digging down into exactly what is Bitcoin, and that'll be a good video. I posted one the other day, just kind of an intro to this basically a course on this, and it was kind of, I just wung it because I promised everybody I'd get the video out, so it was a little bit of a teaser, but we'll dig into these in greater detail this week. Because the stimulus package went, okay, you got that out. You're diluting the value of the dollar. Check out anything possible. If you throw more money into something, it dilutes the value of the dollar. What's the dollar doing? Well, it's up again. So there's a disconnect here. Eventually, this will correct one way or another. And we can't pull back the stimulus money, so the only thing that could be affected is the devaluation of the dollar. This will come. It will come eventually. I'm not saying it's coming years down the road. When this moves, it's going to drop dramatically fairly quick. When that's going to be, I don't know. I wish I had a crystal ball on that. So let's go to the stocks that we monitor on a daily basis. This is my watch list plus a list of a good portion of these stocks I do own. I dumped out of a lot of positions last week. I got kicked out by my stop losses, but the staples that I had as staples was FANG. Everybody referenced FANG. Facebook, Amazon, Apple, Netflix, and Google. I don't own Netflix. I don't know why. I'll just say it that way. But Google, it's down $8 today. Apple's down $2 today. Facebook is down 90 cents today. That's my part of FANG. That's the staples. They're not doing well. They were high flyers. These are technicals. People are moving their money out of these areas, moving into gas, exploration, leisure, and so forth. So let's focus on that a little bit. I have been adding to my positions in cannabis. So you're going to see some of those. We'll talk about those this week. Cureleaf is up 2. Canopy is up 2. But let's go down to the ones that I've been adding to my positions and why. I think when everything, the world does open up, we're going to see, especially I'll guess say, leisure and hospitality is Disney. They got everything. They got hotels, theme parks, cruise ships, restaurants, everything you can imagine. It's up 4% today. Okay, so love it. Okay, so that's the one play I got there. The other play is on. I just added to a position in something called Gush, Gush. I think that's all the way at the bottom. I think. Let me see if I can find it. It is my play on energy. I don't know if it's in here. Let's see. But if it's not, I will add it to this position for us to look at. The other thing I added to, but it's GUSH. Check it out. Do your research on that. The other thing is XLF, which is the financial sector. It's a ETF that is based in heavily weighted or completely weighted on financials. It's up 1.8% or almost 2% today. So those are the areas I'm focusing on right now to add my positions. What I was saying is, if you're just like, I really don't know how to study this and I'm learning, well, hire one of the best financial minds in the history. And it's Berkshire Hathaway. I don't have this position because I try to manage my own, but this is a great way to invest, to use Warren Buffett's knowledge behind to help you, gain some, get some gains in the market. He's a fantastic investor, and if you have the Berkshire Hathaway Plan B or Series B stocks, $258. The Series A stock, I think, is like $30,000. So look at this. It's just a fractional share of the A series. So that's that part of it. Somebody was kind enough to find me what the stimulus package contains. And I'm going to be going over that all week and come back with you with the facts behind it and highlight the areas that I think are like, okay, that's well needed. That isn't. If you can see up here, there's 591 pages. I'll dig in as much as I can, and hopefully Friday I'll be able to come back with you guys and say, here's what's in the bill. And then maybe I would put a poll up and say, do you guys agree that there should be a subway built in Silicon Valley for $100 million, part of the COVID stimulus package? And then you guys vote yes or no. And then we can see where that goes. Today, what's going on with mortgage rates and bonds? 10-year Treasury is up 4. Hate it. But this is all going to start slowing a little bit. MBSs, I follow this on a daily basis. If you're interested in real estate, mortgages, you're a real estate investor, a realtor, a mortgage person, you might find value in my videos every night at 5 o'clock. The rate update with Dan Frio. We follow this. This is what's going on to the price of the mortgage-backed bond as the price goes down, which is red. It means mortgage rates went up. As this goes up, means mortgage rates go down. So we're up just a tad today, not enough to make a difference in the market. So that is it, other than the economic calendar for the week. It's basically going over inflation. We got a lot of indexes for consumer pricing and such. We got that throughout the week. Then we have initial jobless claims that are coming in Thursday. That shouldn't really surprise anybody. I'm still saying the unemployment claims are going to be big because, again, if the government passes a stimulus package that says, you can make more money staying at home, most people are going to elect to stay home and make more money. So that's what's going on with that part of it. And then we got on Friday, we conclude with more PPI, more inflationary numbers, and this is basically where the Fed concentrates on. So Friday will be a big day when it comes to that part of the equation. So that is it for today. I hope you guys like what you see. I hope you're getting value in this channel. So I greatly appreciate you guys following me. Please give me a thumbs up if you like it. Click the bell so every time I post a video, you get an alert. Subscribe. Subscriptions are going up about 100 a day. Thank you. I can't thank you enough. So God bless. Have a great day. I'll see you guys at 5. Bye-bye.